Okay, welcome back to part 3 in this web tutorial series on the NEC, which stands for New Equity Curve. Real quick, I always recap for those who haven't seen the previous two videos. Anything in dark blue, just take a look at the application. If you see a dark blue cell that looks like this, oops, sorry about that, that looks like this, any of these, here, any of these four or three, I guess, here, and we're going to be covering the Trader Stability Index today. That is the purpose of today's video. Your dollar goal and number of consecutive losses, those are all user-defined variables. You, the end user, can change and model your own performance metrics. That's the power of the application. The other powerful thing, of course, is the ability to Monte Carlo simulate your settings. So what does that mean? You may be a particular style of trader who trades a particular instrument, who has a specific stop loss, and your performance may be a 51% winning trader, 49% losing trader. Your profit targets, all of those are your individual settings. And what we do then is hit F9 on your keyboard. So we're going to hit F9, and what we're doing, or what this application does, is it randomizes your order of wins and losses. It is effectively stress testing whether you're going to pass or fail, and even beyond passing the evaluation, it's going to evaluate how successful you are going to be as a trader on a go-forward basis. So sample size is something that they use. It's a scientific term, but it also applies to trading, which is, well, I've had a good track record for, maybe you're a newer trader, and I've had a good track record for the past 25 or 30 trades. That's not enough. You need more trades to assess whether you can perform in all market conditions, whether your settings, whether your performance metrics will be able to stand the test of time. This application basically replicates in advance what you can expect, what could happen. And again, if I hit F9 like this, it's randomizing hypothetical wins and losses based on what your profit target would be. So if you say, if you look in this column here and you see green 144, that's what you would get paid based on your settings. Let's go through that. Let's look at that. Okay, so green is 144 a payout. Whoops, it just shuffled. The black minus 48, it would be your loss, and gray represents a break. Represents a break even. So how do we come up to those numbers? Let's just quickly take a look. We're trading the micro NASDAQ. Each point is $2 per contract. This trader here has elected to trade 3 contracts. We could change this down to 2 or 1, but let's put it back to 3. Actually, let's leave it on 2 for a second here. And you'll see now the payoff is, let me just double check something here, $96. See that? If we put it up to 3 contracts, now we're up to $144. Well, where did that math come from? 2 times 3 is $6 a point. Because we're trading 3 contracts, it's each point that it goes in your favor, it's $6 a point. Well, how did we come up with 144? Well, first off, we have to establish our stop loss. So we've got it sitting at 8 points. Let's go ahead and increase that to 10. One more. There we go. 10-point stop loss. 3 contracts times $2 a point is $6 a point. If we are in a losing trade, $6 times a 10-point stop loss is $60, right there where my mouse is. Our payoff is an R multiple right there. So I'm going to highlight this whole row. So that's the R multiple row. And if we have a single exit where a trader says, look, I'm just looking to hit my first profit target, which is denoted as PT1, profit target 1. A trader's trading 3 contracts and has a 3R multiple. What does that mean? 3 times your risk. If you're risking 10 points, you're looking for a 3R multiple or 30 points. 30 points times 6 is $180 payoff. Okay, so simple math. A stop loss is $60, and there it is, a losing trade is $60. A winning trade, everything is color coordinated. In dark green, a winning trade will pay you $180 if you're trading 3 micro contracts. Okay, so that's as lengthy as I'm going to get on the application housekeeping. I did that just for the benefit of people who haven't seen the previous 2 videos where I explain how that works, where the user-defined variables, everything in the dark blue cell. What I wanted to cover today is this, the Trader Stability Index. What does it mean? How is it constructed? And why is it so powerful? I think when we first get into trading, especially in prop trading, our biggest goal is A, pass the evaluation target, B, cover off the buffer zone, and then C, we finally get to that dollar objective that we all want to have, or what our goal would be. And that, again, is in dark blue, which means it's a user-defined. Someone may be a much more serious trader and says, I'm looking to make 20,000. Okay, fine. This application answers the question, which I think has been lacking. How long is this going to take? How long is it going to take me to pass the evaluation? Roughly. How long is it going to take me to get through that buffer? Roughly. And how long is it going to take me to make my first 3,000, or whatever you want in the drop-down user-defined dollar goal? How long is this going to take me? Well, this application answers that, but not in the sense of traditional time. It doesn't tell you how many days, how many weeks, or how many months it'll take you to pass, cover the buffer, or hit your dollar goal. What it does do is it gives you a realistic expectation on the number of trades required by you, the trader, to get through the evaluation, to cover the buffer, to hit your dollar goal, and all the while not hitting your EOD DD. What does that stand for? EOD DD, end of day drawdown. I think anyone listening to this knows if you purchase an evaluation, you have 30 days to pass. And to pass, that means get through the evaluation. But within that 30 days, you cannot lose. In this case, it's a Take Profit Trader 50K account. All right, I highlighted that's also a user-defined variable. You can pick what firm you're with, what size account you want. Let's just stick with the 50K Take Profit Trader. Again, if you want more explanation on that, go to the previous 2 videos. So for the 50K Take Profit Trader, you need to make $3,000 without losing $2,000 in that first 30-day window. If you can do that, you'll pass, and then you have to get through the buffer zone, and then you get to the dollar goal that you define as the trader. How many trades is it going to take me roughly? And I say roughly, and I'm going to explain why, to cover the evaluation. How many trades is it going to take me to get through the buffer? And how many trades is it going to take me roughly to get to my personally user-defined dollar goal? And when you hit F9, you engage something called rand between, or the rand function, random. And what it does is it randomizes the order of your wins and of your losses. It's stress testing under all scenarios, and it will give you a sense of what lies ahead for you based on what you have told the application your performance is, as far as your absolute win losses, your profit targets, your stop losses, whatever contract you're trading, the number of contracts that you're choosing to trade, and of course the probability of reaching said profit targets. And of course we have in gray the break-even trades. You have to factor in that not all trades are going to either stop you out, or not all trades are going to hit profit target 1 or profit target 2 or 3 if you want to model it that way. But there will be many trades where you have a break-even, where a trade moves in your favor initially, but does not quite hit your profit objective, user defined. So here you've got a 30-point profit objective, which is a 3R multiple of your stop loss. And maybe you're up 10, maybe you're up 15 points, maybe 20. It does not hit your profit target, but what most astute traders will do is they will move their initial stop loss of 10 points right here, user defined. They will move it up to their entry price, so that if the market reverses after being up 15 or 20, you stay disciplined, you don't take those profits, and unfortunately the trade or the momentum dies, it turns and comes back down. I'm assuming we're in a long position here. The position or the market turns, comes back down, and hits your stop loss. Well, the stop loss has been adjusted, and that is how you will have a break-even trade. So we have to factor that in as well. So if I hit F9, like I'm doing right now, you can see here, and we're going to use the scale with the break even. This is a comparative. This is for a trader who is all in, all out, no break even, versus a trader who at the very least will move his or her initial stop loss up to break even. And again, scale with break even could include somebody who wants to go for that bigger move on a profit target 2 or profit target 3. That is not the topic of today's discussion. So I just wasted 10 minutes giving you an introduction of how the application works. And as I've said twice or 3 times already, if you want a more in-depth explanation, just go to my first 2 web tutorials in this series on how to use the application. Today we're going to focus on this right here, the Trader Stability Index. It's a proprietary indicator that I designed. This is my 28th or 29th year of trading full-time. I initially started out as a derivatives and options trader exploiting mispriced options volatility, and then I moved into the futures space. So this application is a labor of love. It is something that I felt was not available in the marketplace, and I think it is 100% invaluable. It is a gut check, reality check. It basically pulls back the curtain and says, this is what you're in for if you want to get in this space. We've all seen the social media posts, whether it's YouTube, whether it's Instagram, TikTok, about how much traders are making, and many of them are very, very, very good, but there is so much more that they're not telling you. There is so much that is being left unaddressed, and I hope that this application will answer those questions and again kind of pull back the covers and empirically show you that there is work to be done and there's no free lunch. There is a reason. It is statistically proven. It is out there. This is not a secret. That 97% of traders fail. 97%. That's not a made-up number. In fact, some of the prop firms are now releasing, I believe Top Step just released some of their own internal metrics as to the amount of people who pay money to take an evaluation and never even pass and never even get to a payout. It's well above 95%. So even if I'm off by 1 or 2%, 95% of traders never reach a payout. And here's the other side of the story as well. Many of these huge traders, these ones that post on social media, do they make a lot of money? They do. They absolutely do. But what they're not telling you, and some will, some being fair, will tell you, they blow through hundreds of evaluations. So you may purchase 10 evaluation accounts at once, blow 7 of them, but they'll show you the rock star returns and performance on the 3 that they passed, and they don't talk about the 7 that they failed. Because to them, it was $50 or $100 or $150 to buy the evaluation. They don't care. I've heard them say it. They openly say it. It's okay to fail prop firms. And in many respects, they're not being dishonest. That's part of the game. That's part of their model, is that they're going to go hard during the evaluation process, meaning they'll trade larger position sizes than they normally would if it were a live account or a sim live account. So during the evaluation phase, if you can trade up to, I believe here with the 50K account on Take Profit Trader, you could trade 6 mini contracts or 60 micro contracts. And that's a lot. Trust me, that's a lot. But they'll do it. Maybe not to that extreme. They may trade 4 minis, which is a huge position, because you remember you cannot lose more than $2,000 during the evaluation phase. But to them, they will put the pedal to the metal. All they need is 1 or 2 really good solid days and they've passed the evaluation. So I'm here to kind of get you beyond just passing the evaluation. What does it take to become a successful trader on a consistent go-forward basis? That's what this application was designed for. And this is why I designed the Trader Stability Index. So how is it built? Let's get into it. Number 1, what's the most important thing to a trader who is in the evaluation? I just talked about it, which is passing. So a trader can pick, again, remember what I said? If it is in dark blue, it's a user-defined field. All of these which contribute or deliver the end result Trader Stability Index number is a function of what you, the end user, the trader, has input. So real simple question, if you were sitting across a table from me, I would say, how many trades in an ideal world, how many trades would you like to take before you can pass? Or what's the minimum, or I'm sorry, other way around, what's the maximum number of trades that you would want to take in order to pass the evaluation? So hypothetically, I've got 35. I'd like to trade no more than 35 times to get through my evaluation. So in a perfect world, the number of trades, and in fact, I put my mouse here, it says right there, M&H, Morph and Harvest. Enter, okay, I'm sorry, wrong pop-up, sorry about that. Enter the ideal number of trades required to pass. So I said, okay, if I could make 30 to 35 trades, I've got it at 35, but you can change this. Okay, I could lower it. Some trader may be very, very, very aggressive and say, look, I don't want to trade any more than 28 trades. Okay, I'm just making these numbers up as we go along. Now, part 2, what is your ideal max drawdown? Well, with the Take Profit Trader 50K account, the most that you can lose is $2,000. Ideally, we don't want to come anywhere close to that, right? We don't want to be drawn down $1,800 or $1,900. We've only got $100 left before we blow the account. So what is the ideal max drawdown that you would like to keep within? So I've got it at 50%. So in a perfect world, I only have to take, let's put this back to 30, okay? I only have to take 30 trades maximum in a perfect world. And I never come close to the $2,000 max drawdown. I am, in a perfect world, once again, I never go beyond, I'm down $1,000. Okay, fine. And then the third part of the metric is enter your ideal, let me just put it up there again, oops. Enter your ideal number of trades to recover from a drawdown. So if you don't know what that means, let's say, for example, you start trading, you're doing well, you're up $1,000. And then you have 2, maybe 3 losses in a row. Or maybe you have 6 trades where you took 3 losses. They were not consecutive, but you were up $1,000 in profit from all your trades, and then you drew it down to $750. So you gave back $250 on a recent string of trades. So how quickly can you recover and get back up to that 1,000? So that's what this metric is, which is enter your ideal number of trades to recover from a drawdown. So for me, if I have a drawdown, in a perfect world, I only have to take 3, maybe 4 trades to get back to that high water mark. So a high water mark was, or is, that $1,000, where that hypothetical $1,000 where we had our profit up to, and then we had the drawdown. It's like, well, how many trades is it going to take me roughly, based on all of these settings, based on my performance as a trader, based on the number of contracts I'm trading, the contract that I'm trading itself, which is the micro NASDAQ, based on my stop loss, based on my R multiple, so 3 times my stop loss, based on all of the metrics that I have set and defined as the user, how many trades roughly is it going to take me to get back to that high water mark? Well, ideally, I don't want to have to take more than 4 trades. And in fact, if you look right here where my mouse is, I highlighted it, it says average number of trades between peaks. So as you start to do well and start taking your trades, and then you have a drawdown, as you can see right here in the black, it says max drawdown. How many trades roughly will it take for me to recover and get back to that high water mark so I can continue and progress and move my equity curve, which is why it's called the new equity curve, higher? So 3.55, based on all these settings, is what you can expect. Now, if we hit F9, let's go ahead and hit F9. We're going to randomize the order of our wins and our losses based on our settings. And all of this will change, and you can see the numbers changing. Now, the graphs take a little bit longer to update, only because we are in record mode right now. As you're listening to me, right now, if I stop touching everything, it's going to take probably 20 seconds, and it will refresh all the charts. But you can see all the numeric values are changing every time I hit F9. And it's going to tell me right here, it's going to take me about 60, a range anywhere from 38 to 45 to 123, 68, 88, 79. I'm going to say roughly, just to pass, based on my performance metrics, that I, the end user or end trader, have entered, is going to take me, looks like, I'm going to guess, about 90 to 100 trades just to pass the evaluation. It's going to take me about 110, 120 to pass the buffer. It's going to take me about 200 trades to get through to reach my dollar goal. So it's going to take you a while if you're going to trade 3 micros and you're only a 51% winning trader. So what now? Getting back to the Trader Stability Index, I don't want to change this. The ideal trader stability index, and you can see once again, if we hit the F9, it changes, and they're all nicely above the 55. I consider 55 the threshold. Any numbers that start coming in under 55, 50 at the absolute lowest, 50 on a scale of 1 to 100, 50 is the bare minimum pass. Ideally, you want to be 55 or higher, and this is very, very comfortable. And what it's telling you is, yeah, it may take you 88 or 90 or 100 trades to pass, but you're not going to blow the account. So it's going to take you some time, but you're not going to devastate the account because you're only trading 3 micros. And when you do get stopped out, it's a manageable $60. And what you want to look for is this right here as well. This under end of day drawdown, EODDD, and this kind of go hand in hand. If you ever see a value here, it means somewhere at some point within the 600 trades. Let me just scroll down and show you. There are 600 rows here, 600 hypothetical outcomes. And every time I hit F9, it engages the RAND between functionality, which is a Monte Carlo simulator, which runs hypothetical string or series or subset of trades. It's telling you it's going to take X number of trades to get through. So again, it's randomizing the wins and losses. Sometimes you may have a string of wins very quickly. Sometimes you may have a string of losses, but never do you see a value populate in there because you did not blow the account. If you even see a 1 in there, that means you blew the account at some point within that 600 trade series. And here's a very, very, very important point. It could happen in trade number 521. And you say to yourself, well, I would have passed by then. That's true. That's true. But even if it populates with a single value, that trade number 521, the hypothetical row where you blew the account, could have easily been trade number 2. That could easily have been the second trade in a series, and then you blew the account. So again, this is why we continue to hit F9. We are basically, every time we hit F9, it randomizes 600 rows times 1,000. It's running 600,000 potential outcomes. So here we have a high trader stability index number, which is beautiful. But let me show you what happens if you're not that good of a trader, okay? So this is not a phenomenal trader. It's pretty much a 50-50 trader. But what if you're new to the space? What if you're new to prop trading? You've heard about all this money that traders can make. I've seen the social media posts, and I want to jump in. I'm going to buy 2 or 3 different accounts, okay? Right. By the way, I just want to show you, we have a trader here who is trading 5 copy traded accounts. Take Profit Trader, that is the maximum number of accounts that you're allowed to have with Take Profit Trader. But let's just hit the drop down, user defined field in dark blue, and let's just make this trader trading a single account, okay? And now let's also show a trader that is not that good. They're kind of new to the game. No shame in that. Own it, okay? You've got to be able to be realistic with where you're at in your journey on trading in order for you to grow, to improve, and to finally, hopefully, succeed and become one of the 3 or 5% that make this, not just passing the evaluation, not just covering the buffer, but going forward. What is it going to take for me to bring in a steady income so I can be a trader for the rest of my life and perhaps quit my full-time job? So let's go ahead and not increase, sorry. We want to decrease. So remember what I said? The blue is the field that we are manipulating. This is an absolute losses. So what we're going to do is we are going to increase your losses, which will by default decrease. So out of 100 trades, let's say you lose on 61 or 62% of your trades. Okay, well, look what happened to the trader stability index right there. Okay, so let me go ahead and hit F9. This is a trader who is only correct 38% of the time, which by default, or I should have said it the other way, they are wrong on 62 out of their 100 trades. Not very good. It can work, but you'd have to have a massive profit target, meaning your R multiple would probably have to be about 8 or 9 to 1. Okay, so if you're risking 10 points, you're looking to make 9 times that every time you do hit your profit target. So it could work. We're not going to model that out, but right now we're just showing you a trader who takes a lot more losses than they do wins. Well, look how that affects the number of trades it takes you to pass, the number of trades it's going to take you to get through the buffer. They're way up there now. Look at how many trades you'd have to take just to get to your $3,000 goal, and look what's happened to the Trader Stability Index. Remember I said 50 is the minimum that you want to have. 55 is ideal, 55 or greater. Well, now, because you're not that good of a trader, and that's okay, it is and it isn't. I mean, it's an honest input. If that's where you're at in your trading journey, put it in, and it's going to show you you're probably going to fail. And remember what I said here? End of day drawdown. If a value pops up there, if it happens in trade number 100, 200, 521, or trade number 1, it means you at some point have the ability to fail and you'll blow the account. Look at that. Once, twice, 6 times, you would have blown in the 600 trade sample size, you would have blown this account. So you can see that these numbers are not going to work for you. Now, if someone said to me, but that's where I'm at. I'm a 38% winning trader. Most of my trades are losses. I'm learning the game. Well, then a couple of things would have to happen. Reduce the number of contracts. Bring it down to 1. So you're not trading 3 now, you're trading 1. So let's hit F9 and see how that affects the Trader Stability Index. It's still not very good. You're still well below the 50 minimum. As you can see, most of these are red. Let's see if you blow the account here. Okay, and this is a great segue. I don't see you blowing the account, okay? I don't see any value populating right here where my mouse is. That's a good sign. But you're only trading 1 single micro. It's going to take you forever. Look how long it's going to take you to pass. That's 600. That's the maximum number in this application. There's only 600 rows. It's effectively telling you it's going to take all 600 and beyond before you pass, because you're not that good of a trader and you're only trading a single micro contract. This is reality. These are empirical numbers. I'm not making them up as I go along. These are all formula driven. So let's go ahead and continue to shuffle. Now, the Trader Stability Index is a function of what you said you wanted to pass. You said, oh, I'd like to pass within 30 trades. Oh, I don't want to ever draw my account down more than 50% of the max drawdown. So you're effectively saying, I don't want to ever lose more than 1,000 of the 2,000 maximum that is allowed with the 50K take profit trader account. So let's continue to hit the F9. Look at the recovery. Remember I said this is the number it's going to take you to recover from a drawdown. This is all the way up to 7.61, meaning it's going to take you 7 to 8 trades. Now let's hit F9, 13, 9, 8. It looks like it could take you anywhere from 5 right up to 13 trades just to recover from a drawdown. Again, that's because you're not that good of a trader. Can we improve this? We've reduced it down to 1 contract. We can improve this. It's going to take some time, but I could, let's see if I can skip this. I'm not even sure. No. So what we could do is we can go all the way up and improve your R multiple. That will help greatly. So let's go all the way up, and you can hear me changing this. Let's try to put it at least 5 to 1. So when you lose, what are we losing? 10 points, which, because we're trading a single micro, just one single micro, if we're wrong, it's a 10-point stop, we lose 20 bucks. But let's put our risk reward to 5 times. Let's see if that improves, and it does. Take a look at this. Our R multiple is now 5 times. So every time we lose 10 points. Every time we win, we make 50. We're still only a 38% winning trader. 62% of all our trades. So out of 100 trades, 62 are going to end up in a loss. Not good. But when we do have the win, because our R multiple is so large now, we actually have improved the numbers. It's still going to take you 160, 250. It's going to take you 385 to get through the buffer. Now it's changed to 300. And it's going to take you right there, 581 just to hit your dollar goal. How many traders are that disciplined to wait and go through 581 trades? And again, even though your R multiple is 5 times, or it's a 5 R multiple, you've improved this Trader Stability Index, but it's going to take you forever to pass. Okay, it's going to take you forever to pass. Just to pass, you're looking at about 160, 117, 190. It's all over the map. Somehow, okay, so let's continue this, and let's go up to a 7 to 1. Let's do that. Let's go all the way up to a 7 to 1, 7R multiple. Okay, so I apologize, but you get to see the application and work every time we click. We're increasing the R multiple. So 10 points is our stop. We're going to go for 70 points. on our win. We don't win often, only 38% of the time, but when we win big. I've heard that narrative for 20 years, 25 years, and it's true. It's true. But how often do we get that 70-point win, right? And let's deal with psychology for a second. If you're up 30, 40, or 50 points, it's tempting not to take that. It's tempting not to take it, especially when you're wrong. 62% of your trades you're wrong, and finally you catch one. You're up 10, you're up 20, you're up 30, you're up 40, you're up 50. Well, according to this, according to your settings, you got to wait until you're up 70 points before you can take that profit. I'm just dealing with reality, and I know the human mind. I know myself as a trader and what I went through the past 28 or 29 years. You're tempted to grab that 50-point, that 5R multiple, but yet you modeled the 7R multiple. So how does that work out? Much, much better. Take a look at how long it'll take you now to pass the evaluation. We're down into the 100. Let's hit F9 a few times. 100, 125. It's much more consistent. Okay? So all the numbers have lowered. We want the lower numbered. Our trader stability index has improved. Look at this. There's none below 55 now. So it's a good thing. But how often do you get these R multiples of 7 times what you're risking? It's probably not that often. So now we would have to adjust our win weighting, meaning the more points you go for, the harder it is. Well, if it's harder, then the probability of reaching that diminishes. So now we have to diminish the probability of getting there. So now let's drop it down to 60, and we will increase our break-evens up to, this number here, by the way, has to total 100. It says the weighting. So we've dropped our probability of reaching a 7R, 70 points. We've reduced that from, I think we had it at 75. And now we have to increase our break-evens, meaning we don't make any money. We've got to bring this back up to 100. That should be 100. There we go. We're back to 100. What's happened is, because we've increased our expectation, a 7R multiple, risking 10 points to make 70, okay, that's great, but it doesn't happen as often. That becomes more difficult, so you have to accommodate for that, reduce the weighting or reduce the probability, increase the break-even status. We're still a 38% winner, which means we get stopped out on 62% of all our trades. That's reflected here in the pie graph. 62% is black. We've increased our break-evens, which is in gray, and then the dark green is a very small slice of the pie. Look at this. 78% of every single trade, 78% will result in a loss of $20, or it will be a break-even trade. 78%. So by default, only 22% of every trade you take will make you any kind of money. So out of 100, only 22 are going to give you something in your pocket. And I haven't even factored in the commission fees. I've left that blank just for this tutorial. That's very, very sobering. 78% will either be a stop loss, meaning you put the trade on and it moved against you, you get stopped out. Done. You lost your 20 bucks right here. Or another percentage right here, 15%, will be just a break even. If you can, there's an interesting graph right beside it called non-losing outcome. So what does that mean? It means you didn't get stopped out. It means it moved in your favor. Maybe, as I said, I just gave you the example. You're up 20, you're up 30, you're up 40 points, and you do not sell. But what you do is you take your stop loss from 10 points and you move it to break even. So you're up 40 points, you're up 50 points, and then it turns and comes back down and you get stopped out. You make nothing. That's a break-even trade, or what I call no man's land. You didn't make anything. And you just had, I don't know, $80, $100 staring you in the face, and you chose not to take it, which is a good discipline, because your discipline is, nope, I've got to wait for my 7R multiple. I want my 70 points. What if you were up 60? That's very, very, very difficult psychologically not to take that money, especially when you're only right on 38% of your trades. So now you see what really goes on in the mind of the trader and the reality of trading. We want to pass this thing, and we want our trader stability index. We want to get through the trades in about 30 trades, or ideally 30 trades or less. We never want to draw down our account more than 50% of the max drawdown. And in a perfect world, we want to be able to recover from a drawdown from our high water mark within 4 trades. So let me put it back to a somewhat decent trader. Okay, let me put in my own numbers. I'm going to put in my own results. So this is where I'm at as a trader. So I know that on, I think I'm not that. Okay, so let's reduce this a bit. Oh, it's 64. Let's just say 65. Okay, we'll go 64. 36% of every trade that I take will get me in a stop out. 64%, which are pretty good numbers, but I have experience, 64% of my trades will end up in either a break even or it will hit my first profit target. Now, I don't go for 7 to 1, so let me go ahead and take the time and reduce it. And then we're going to wrap this up because this has now been 35 minutes. So let's reduce it all the way back down to my realistic numbers. And it takes a little time. And I did this, when I designed this application, I deliberately made the increments in, you could see 0.2, whatever, instead of moving it in large numbers, because every trader is different. And every trader has their own performance metrics and their own R multiple. So I wanted to give you the flexibility and be very precise as to what your own personal R multiple is. So it takes a minute just to get it to that setting. So let's go all the way back down to, mine is about 2.6. So let's put 2.6. That's my R multiple based on my own experience. That's my first profit target. Okay, so let's go down. There we go. There's close. Okay, 2.6. And my stop loss, I try to average it no more than 15 points. Okay. So my first profit target, and I'm going to usually, on a 50K account, this is what with my experience and performance, I'm going to feel comfortable trading three micros if I were trying to pass this evaluation without putting the pedal to the metal. Let's forget the evaluation. Just let's say we passed the evaluation, we've gone through the buffer, and now I'm earning money. This is what these are my settings right here. I'm about a 65% win-loss ratio trader on an absolute basis. I go for about 2.58, 2.6 on my win-loss ratio, my R multiple rather, and I trade about 3 micros at a time. And I don't put the pedal to the metal. Well, take a look. There is my trader stability index. It's about 65. Now I can hit F9, which I'm completely comfortable with. 69, 68, 63. I don't blow the accounts. And again, forget just passing the evaluation. Forget the end of day drawdown. Let's focus on, I'm doing this for a living. I'm not doing this for fun, and I want to really do well and be consistent and steady. I don't swing for the fences. I go for singles, maybe a double all day. Take a look at my trader stability index. Nice and steady. Nice and steady. It's going to cost me or take me anywhere from 44 up to 130 trades to pass, but even after passing, you know, my dollar goal, it's going to take me about 111 trades to make $3,000. And then it becomes easy after that once you've passed. Okay, how long will it take me to make the next 3,000? Well, about the same thing. But if we're only trading one account, it seems like it's lengthy. Well, not really, because take a look at what happens if you're trading 5 accounts at once. And remember, this application is not built around traditional time where we're talking the end of the day, end of the week, end of the month. This is around number of trades. Here, right now, as it sits, it's showing me 53 trades. It just changed to 65 to cover the evaluation. Well, that means I can make $3,000. Think about it. Let's say we once again have passed the evaluation. We have passed the buffer, and we even got to our first payout goal. This number of 57, let's pretend that we've passed. To get to $3,000, it's still taking me about 38 trades, whether it's to get through the evaluation or to make a payout. Let's say we're in 6 months of consistent payouts. It's still going to take me about 38 trades to make 3,000. Whether it's in an evaluation phase or whether you've passed, it's still going to take me about 38 trades. And if I copy trade 5 different accounts, take a look at my monthly residual income here. 14, 8, 9, 12, 13. Not a bad income. Sometimes it's not that great, but take a look at the consistency. Well, how about trades 1 through 150? Take a look at your income over 5 trades, and I'm a 64% winning trader. I'm only trading 3 micros. I'm not swinging for the fences. My stop loss is controlled. Okay, well, it's 14.75. It should be about 15. Take a look at these numbers. So how long does it take you as an individual trader to trade 150 trades? How long does it take you to trade the first 30? Take a look at the results if you copy trade. Not a bad income. Last thing, very, very, very last thing. I showed you that ideally you pass the evaluation in 30 trades. You never draw down your account more than 50% of the maximum drawdown. Okay? These all apply whether you're in the evaluation phase, the buffer phase, or whether you've already gotten 7 consecutive or six months of consecutive payouts and you're on fire. These numbers apply based on what you're trying to get. The goal is 3,000. Think about this. To get to the buffer, basically you're saying, how long does it take me to make 5,000? 3,000 to get through the evaluation, 2,000 to get to the buffer. Okay? So if it takes me 90, you're basically telling the computer it's going to take you 125, or you're telling the application it's going to take me anywhere from 70 to 80 to make another $5,000. 3,000 evaluation, whether you passed or whether you're well past it, to get to that $3,000 level is the same number of trades required. Okay? So the last point I wanted to make, 4 trades to recover. These are your ideal settings. User defined, hey, 30 to trade and 30 to pass the eval. Let's just use a little bit different language. 30 trades to make my first 3,000. That's ideally, that's what I would like. I never want to draw down more than 50% of my account. That's the ideal setting. And if I do have a drawdown from the high water mark, I want to be able to recover within 4 trades. And as you can see, it's about 3. I'm going to shuffle a couple times, 2, 3. This is consistently under 4 trades, so perfect. What are these here? What are these blue cells here? There's a slider here. This is even taking it one step further, where how important of these 3 metrics, what's the most important? What is the most important to you, the trader? Is it how quickly can I make that 3,000? Whether you're passing the eval or whether you've already passed it, how quickly can I get to that $3,000 target? Okay? And I want to do that within 30. How important of the 3 metrics, how important is this one? I said that's 66% important. On a scale of 1 to 100, the most important thing to me would be get to that $3,000 profit target. Whether you're trying to get through the evaluation or whether you're just trying to make another 3,000 after a payout, that's the most important. So I gave it a 66% weighting. I could easily change this and say, okay, that's a little heavy. Let's make it a 62% weighting. So this is important. I'll make it 60. But it's not everything. It is the most important of the 3 metrics, but it's not everything. What's important to me is I don't like drawing down the account. So now if you see this, it changed to 94. It turned pink. It's letting you know you've got to bring this up to 1 or 100. So maybe what I'm going to do now is increase, hey, what's really important to me, I think it's also a little more important not to blow the account. I don't want to ever get below 50% of the max drawdown, so I'm going to increase the importance in the equation. Let's bring it up so that we're back to 100. There we go. Oh, I went too far. We're back to 1 or 100, and we'll leave the importance factor as far as how quickly can I recover from a drawdown, 4 trades. There we go. And now what we've done is I've shifted the importance or the weighting of getting to $3,000 of profit within 30 trades. That is my defined variable. But I took some of the weight off of it. Okay, it's important, but not everything. I had it a little bit too, I got to focus. It's got to be a yin and a yang kind of thing, if that makes sense. If there's a balance between getting to that profit target as fast as possible and not drawing down my account. So I still think it is the most important, but just not as much as I had been giving it before. Now we hit F9 and look at the end trader stability index, F9. See, it dipped. It dipped a little bit. So what that's telling me, it's not as robust as it was, because I said it's more, there's more importance now should be placed on don't draw the account down. I made it more important, so therefore now the trader stability index is not as robust as it was. So how can I accommodate that? A couple things. I can increase, because I reduced, remember what I forgot to do, because I reduced my profit target 1, my R multiple, it was, remember I had it at 75, and then I said, oh, well, what if we went for a 7R multiple? Well, of course, that's not as realistic of reaching. It's much harder to get 70 points than it is to get, in this case, 39. I can now increase the probability of me getting there. Let's put it at 70%. So that should be 70. Now we have to get this once again to an equal weighting of 100. Let's reduce this. There we go. Now take a look at our trader stability index. There is a higher probability, if it's a winning outcome, there's a higher probability of me having a 2.6 R multiple of my max loss. My max loss is 15, or my stop loss is 15 points. I'm after 2.6 R multiple, which works out to about 39 points I'm looking for. Well, it's much easier to get 39 points than it is to get 70. So the probability or weighting increases and the break-evens decrease. The result is a 100 weighting, which is perfect. And now look at my trader stability index. It's gone back up. We're back up into the 70s again. That is the perfect combination. That is the, what do they call it? It is alchemy. This is the alchemy that you're after as a trader. This is where I'm at. Okay. Now, one last thing I want to show you. What if I wanted to put the pedal to the metal? Watch what happens to the trader stability index. I'm going to increase the number of contracts. I could do it, but I'm going to increase the contracts. I'm going to double it up to 6 contracts. Watch what happens to your trader stability index. It dropped. Look at that. We went red. And it looks like the best is kind of like yellow, which is kind of middle of the road there. It went kind of orange. If it ever goes red, it's disaster. You're going to fail. But here, it's not as robust. And take a look why. Remember, I changed the importance. I said I don't want to draw down my account more than 50%. And I said that's pretty important to me. I increased it from, I think it was at 20 up to 28. I can't remember the exact number. But I increased the importance in the trader stability final equation. Well, take a look here. I just drew the account down $1,800. How did I do that? I didn't do anything different. Yes, I did. I'm now trading 6 contracts as opposed to 3. And when I take a loss, I lose $180 each time, not $90 each time like I was. And so now I'm putting more pressure on our max drawdown, which weakens my trader stability index. There's a higher probability of me blowing the account or drawing down. Now look at the recovery. Okay, the recovery is still okay. 2.6, 2.7, but I'm putting pressure on our max drawdown, and I said I don't want that. Here's an example. I drew it down 1100. Watch this cell right here, the yellow one. Look at the average drawdown now, 1500, 1600, 1500, 1800. That's because I've increased the number of contracts. Even though they give them to me, that doesn't mean it should always be used. So I think you get the idea. This is, I said earlier, this is a great example, a great metaphor would be yin and yang. The more you want, the more risk enters into the equation. It's great if it's a winning outcome, but if it's not a winning outcome, you've increased your average stop loss and so on and so forth. By defining what you're after, as far as how quickly can I get through the evaluation or how quickly can I get to $3,000 without coming close to my max drawdown, there has to be a give and take. And then, of course, your maximum number of trades, your ideal number of trades to recover from a drawdown. All of this goes into the trader stability index. And then adding another layer on top of that, the ability to give the end user a weighting capability is, I tell you, this is what every single trader should be looking at and using in order to become a successful trader. I don't know what your win-loss ratio is. I don't know what your profit targets are. I don't know what instrument you're trading, and I don't know what your stop loss is. But I do know that if you're consistent and trading, use the power of leverage by using copy trading accounts, you don't have to swing for the fences, not even close. I'm going to put this back down to 3 micros. And I'm going to wrap it up on this. I said the Take Profit Trader account, the 50K, in many ways, not in many ways, they are absolutely 100% aware of how many contracts they're giving you. 6 minis, are you kidding me? And 60 micros? I just showed you 3 micros and I increased it to 6 micros. That's about 1/10 of what they allow you to trade. 1/10, and you're blowing your account or you're putting your account in jeopardy. It's almost like they're giving you enough rope to hang yourself. And if you don't know that and you're about to enter this space, or if you are already in this space, then you know what happens when you put on too big of a position size. And it's not sustainable. So I hope you enjoyed this video. It's long. It's almost at exactly 50 minutes, but it's powerful. And I like to always say numbers never lie. This is the stuff that you're not going to see, ironically. You're not going to see this on social media, and yet I'm going to upload this to YouTube as soon as I finish recording this. So this is the other side of the story. I hope you enjoyed it, and thanks for watching.